most traders lose not because they don't understand supply and demand, but because they fall for traps. Smart money creates levels just to liquidate both buyers and sellers. In today's video, I'll show you the exact USDJPY move from last Wednesday, where traders got baited on both sides and how you can avoid being the liquidity. As you can see, market formed a clear supply zone. This is our breakout structure. Everything looks fine, but there is one catch here. This supply is smart money trap inducing traders to sell. If you analyze or look again, you will see it's a supply above this one. This is our real supply, and this is smart money trap to trap and induce traders to eventually liquidate. We can clearly see before this supply caused this huge move that caused the breakout structure, there was build-up of liquidity here. This is the build-up of liquidity confirming that the supply above is the real supply and price will eventually get there, but it needs to liquidate traders first. It will liquidate from both sides. Let's see how it goes. You see, it instantly liquidated supply sellers to go higher. Price is still trapping people here. Everyone would sell after this supply was mitigated, but actually London hasn't opened yet. We wait for London open and see how it goes. As you can see, price again liquidated early sellers, but still price respected the supply, our real supply, and it left a demand. Let me show you. Traders will see this as break of structure leaving behind a valid demand, but actually this is another smart money trap to induce buyers to buy, but actually as we can see, the real supply will hold and buyers will be taken. Let's go to 1 minute and see how it goes. We are looking for a change of character. This is our first change of character. Setting limit order at the high. Give it a few buffer, maybe 1 bit. Target would be the smart money trap below. After mitigation, as you can see, the smart money trap demand, price will fake out a change of character to trap more traders. As you can see, this is the change of character. Let's pick the point of interest on 3 minutes. And this will be the perfect trap to take out buyers too. I actually entered this one. I secured around 3R around here. Wait, maybe the stop loss was below this candle. Let me check on 1 minute. No, actually, I picked this point of interest on 1 minute like this. I secured partial around here. After breaking this high, price went down. As you can see, this is how they trap trader. Supply didn't hold because it was inducement to fuel higher move. Real target mitigation of the supply above. While price tapped that higher supply, it creates fake demand. Classic inducement to track in buyers too. Once buyers enter, smart money thumped cleaning both sides. One tip of advice: don't assume the first supply or demand is valid. Always ask what's above, what's below. Look for the bigger liquidity target, the next unmitigated zone. Identify the inducement. Don't enter where everyone else is trapped. Position with the higher time frame point of interest. If this move caught you off guard, don't worry, it catches almost everyone. But once you learn to spot these traps, trading flips completely. That's what I teach in my mentorship. Daily forecast, 100 trade journal with 69% win rate, my 90-day consistency program, ebook and full Q&A support. DM me trap on Telegram and I will show you how to trade with smart money, not against it.